if you wanted to invest in a tech startup before the IPO, how would you do it? It's tough. So there's a company called Second Market, which will allow you to buy into private companies. If you want to invest in a company that's private, be careful, okay? Because there's two different share classes. There's preferred shares and then common shares. And so what happens typically is if a company goes bankrupt, the people who get their money back first, the entity or people or investors with a senior claim are the debt holders, the bond holders, right? Or the people that gave them loans. Then comes the preferred shareholders. Then the lowest of the low is the common shareholders. And think of the name common versus preferred. So make sure if you have a choice, you get preferred shares so you don't get diluted as much, okay? And quite often, if you want to buy a stake in a company that's private, you're going to have to get permission from the board. So, for example, years ago, at my venture capital firm where I was a partner, we invested a lot in a company called Palantir when it was private. I sold my stake. And in order to do so, we had to get permission from Peter Thiel and Founders Fund and the board in general, because the board of the companies has a ROFR, ROFR. ROFR stands for right of first refusal. They can refuse whether or not you can buy shares. So I would look at the ROFR policy to get board permission. I also look at whether or not you're getting preferred or common shares. And of course, do a ton of due diligence on the company. You could sign up for my MBA degree program or my other courses that will help you do due diligence on the company before even considering investing. And never invest in anything ever without getting an offering memorandum first. Okay, it's a legal document that will tell you all the important stuff about a company. So for example, with Facebook, this here is the S1 filing from 2012 that's created by investment bankers as well as lawyers to tell you all the risks and everything about the company. See if you can get something like this. It won't be as big as this because that company you're considering investing in is pre-IPO. But see if you can get something like this, an investment offering memorandum. And quite often, 6 months before a company goes public, they issue this. They file to go public. And the way you can find out if a company is filed to go public is to go directly to sec.gov. And I'll show you. So you go over here, we go to sec.gov, okay? And then you search to see if the company is filed here. So with Facebook, I showed you earlier in this webcast, you could have gone and looked at their prospectus, that document I just showed you before investing. But for, say, a company like Udemy, the first place you'll find out if Udemy files to go public, and I have no information on when that will happen, is right here at sec.gov, right? You'll click here to see if they file for an S1. They haven't yet. They haven't. This is a filing they did back in 2014 when Dennis Yang was CEO. Good guy. Yeah. But quite often when you're doing due diligence or research on a company that's not public, you could still read the S1 filing if they filed to go public. And again, quite often companies file to go public and allow this document to be accessible, this S1 on sec.gov, 6 months or so before an IPO.